You've probably been taught to trade support and resistance levels. But here's the thing, what you're really trading, often without realizing it, are supply and demand zones. Price doesn't move randomly. It moves because of imbalances. When you learn to spot those zones early, everything starts clicking. In this video, I'll show you why supply and demand levels are the only ones that matter, how to identify them precisely, and how I use them to stay ahead of the crowd. Let's begin with the basics. A supply zone forms where sellers overpower buyers. It often appears after a strong downward move. Price pauses, consolidates, then drops again. That pause, right before the drop, is where institutional sellers were loaded up. When price returns there later, you can expect a reaction. Demand zones are the opposite. Price drops quickly, stalls, and then rallies with strength. That stall is where significant buying came in. When price retests that zone, many buyers will step in again. Spotting these zones is far more powerful than trading random support lines. Here's where retail traders fall off track. Most draw these zones too late or mark massive rectangles that cover half the chart. That's not how professionals operate. Precision is critical. You want to see a clear drop or rally, identify the base candle that started the move, and draw a tight zone around that base. Keep it precise, keep it meaningful. But we don't stop there. Multi-time frame analysis takes this advantage to a whole new level. The most powerful supply and demand zones are often only visible on the 4-hour or daily charts. That's where institutional activity happens. When you drop down to the 15-minute or 5-minute chart and watch price react to a higher time frame zone, it's not a coincidence. It's opportunity. That's why I rely on a multi-time frame supply and demand indicator from SMRT Algo. It doesn't replace your judgment. It simply highlights major institutional levels across time frames. That lets me focus on price behavior rather than drawing zones on 4 charts and hoping I didn't miss something. So here's how I trade supply and demand zones. The first thing I do is add the SMRT Algo MTF supply and demand indicator to my chart. It automatically highlights the most important zones across multiple time frames, so I don't have to manually draw a thing. It's clean, accurate, and saves me a ton of time. If I want to check how price reacts to higher time frame zones, like 4-hour levels while I'm on the 15-minute chart, I can just adjust the time frame inside the indicator settings. That combo, lower time frame precision with higher time frame context, is a game changer. Now with those zones plotted, I wait for price to approach one of those highlighted areas. I don't just enter on the first touch, I watch how price behaves. If it approaches a demand zone and I see signs of exhaustion, like a long wick, slowing momentum, or a clean structure shift, I get interested. When that happens, I enter the trade, place my stop loss just outside the zone, and target the next key level, whether it's the next zone or a clean high. Every trade is built around structure and logic, not guessing. And that's the beauty of using a tool like this. You're not spending 30 minutes every morning drawing boxes. You're reacting to levels that smart money is likely watching, and doing it with a clean, focused plan. Now here's a pro tip that most tutorials gloss over. Sometimes zones fail, and that can be a great opportunity. When a demand zone breaks completely, it may flip into a supply zone. That flip gives you a fresh, high-probability trade in the other direction. It's about reading the market's shifting psychology. When buyers stop defending, sellers take over and price moves fast. To get better, keep a zone journal. Note which ones worked and which didn't. Did price wick reject strongly? Was volume supportive? Did momentum shift right at the level? That's where growth happens. You can't just draw boxes and hope. You must learn how price behaves at those levels. Of course, drawing every zone manually is time-consuming. That's where tools come in. For example, the MTF supply and demand indicator by SMRT Algo highlights clean, accurate institutional levels across time frames. It doesn't make the trade. It makes your setup cleaner, sharper, and faster to prepare. Never forget, trading supply and demand isn't about being correct on every single trade. It's about anticipating where imbalance is likely and reacting with a plan. When you master that, you're not predicting, you're interpreting. And that's powerful. Now, if you want to trade with clarity, stay structured, and stop playing catch-up to price, add the SMRT Algo MTF supply and demand indicator to your toolkit. And if you found this helpful, hit like, subscribe, and let me know which part confused you the most. Structure, zones, multi-time frame logic, I'll tackle it next. Remember, smart trading isn't about luck. It's about reading the market's architecture, and supply and demand zones are the foundation. See you in the next video.